Hello YouTube. So today I want to show you how I analyze the forex market. Alright, I want to show you how I analyze the forex market. So quickly, what I want to do, like I stated in my last video, is I want to look at the daily chart and see what the market is doing on the daily chart. Right, so you want to have a broad view of the market, so you want to do the top-down analysis. Okay, so I'm looking at this pair AUDJPY. In fact, I'm in a trade on this pair. I'm in a trade right now. So one thing I've learned to understand about the forex market is you must learn to accept losses. You must learn to understand that losses are a part of the game. All right, so when you're open to losses, you just realize that this trade I'm going to take might become a loss, might turn into a loss, or it might turn into a win. Whatever the case, you are willing to accept the risk. That's the mindset you must have. However, you must also put in effort in your analysis. So let's look at AUDJPY without any further ado. So what do I see first and foremost on AUDJPY? I look at the higher time frame, the daily time frame, and I can see impulse correction. So like I stated, you always want to look for impulses and correction. So let's begin from somewhere here. So you can see this is a correction, all right, and this is an impulse down here, all the way here. Now after this impulse, let's zoom a bit so you can see and appreciate this better. All right, okay, let me take this off the screen. 1 minute, guys. So after this impulse down here, we have another impulse upwards. All right, we have another impulse upwards. So this is just the way the market moves. The market moves in impulses and corrections. All right, so we have this impulse upwards now, but this was a double top up here. So if I was looking at this market, I'll be looking for a confirmation to sell. But then that's why we're here today. A time is going to come in this channel. I'm going to show you exactly what this strategy is about. I'll break down my strategy from top to bottom so you understand how I trade. But today I just wanted to show you, how I look at the market. So based on the impulse and corrective phases of the market. All right, so let's continue. Now you want to look at the current price. Okay, I was to see that the market started doing something. The market impulsed here, all right, gave us this impulsive phase up there, all right, give us this impulsive phase. After the impulsive phase, what do we have here? We have a correction, a descending channel, all right. Now, but I waited for this descending channel to break. Okay, but let's look at this. So I figured out that there was a descending channel here. I used my trend line to mark the descending channel, and the next thing you want to do is to go down to the lower time frame. So in this case 4 hours. All right, so let's look at the 4-hour time frame right now and see what's happening here. So in the 4-hour time frame, like I said, you always want to do the same thing. So you look for impulsive phase and corrective phase in all the time frames. Now in this time frame, what do I see? So I already marked this descending channel on the daily time frame. Now on the 4-hour time frame, what do I see? I see another impulse and correction. I see an impulse right here. Let me use this too. I see an impulse here. All right, if you want to take it from the top, so impulse right here, a correction this way. Okay, now another impulse down here, and then a quick correction this way, then an impulse down here. But instead of a correction that would have continued this sell downwards, what do we have? We had another impulse. Okay, this is becoming messy. Let me clear the screen a bit. Okay, now don't forget where we are at. Maybe I should change the color of this. Oh, better still. So we have this correction that led to the sell. It always comes to the 90% rule. All right, see, it came here. So if I had taken a sell here, I would have exited here or just managed my trade tighter from here. All right, so there was another correction up here, an ascending type of correction that also extended the market downwards. Now, but after this correction, after this impulsive phase, what happened? The market did not correct. It did not give us a correction. What did it do instead? It gave us another impulsive phase. So this was when my bias began to change. I'm like, okay, so it's like AUDJPY is about to buy, but then you don't just jump into a buy, you also wait for confirmation. So what did I wait for? I waited for the market to give me a sign, give me something I can work with. Now, what did the market do? It corrected, you see, and marked this correction this way. So this correction, don't forget, impulse correction. Once there is an impulse and correction, what do you expect? Another impulse. Okay, so you expect another impulse. After a correction, there should be an impulse. Let's go down to the 1 hour now. So on the 1 hour time frame, the moment I saw that this correction was broken, now the market broke out of the overall descending channel. All right, the market broke out of the overall descending channel. The moment this happened, there was a breakout of this let me mark that, of this trend line here. I don't trade trend lines, by the way, I just use them to mark my charts. All right, so there was a breakout of this trend line right here. What happened? I started looking for a buy. I started looking for a buy signal, but well, I couldn't get in here because it just didn't look clean enough for me. All right, so this was an impulse right here in the lower time frame. I was looking for a correction. This was a correction, but it wasn't clean enough for me to get in, so I stayed out of the market. Don't forget, guys, staying out of the market is also part of trading. All right, so you're preserving your capital, very important. So I saw that, but I didn't get in. Now there was another correction here, but it wasn't also clean, so I take my entries in the 15 minutes time frame. Let's go to the 15 minutes so we can see this correction better. All right, so in the 15 minutes time frame, you'll see that this was a nice correction down here, even though it wasn't clean enough for my entry. So this was a nice correction down there. This should have been an entry for someone. All right, so but I didn't get in there. Now this was a better correction, but I don't know what happened. I missed that entry. I probably was not looking at the market. So this was what time was this? Around 7 a.m. so I was not in the market by that time. I normally come into the market a few minutes to 8. All right, so this was a correction that would have probably been a good place to get in. So if you check how many pips would you have gotten in from here, say 40 pips, which is not bad, but then at 40 pips, so I normally would break even when my trade moves 1:1 in profit. So let's say another 40 pips right there, I would have broken even. I would have moved my stop loss to break even, right, to the entry point. But no, I didn't get in there. So I was looking at the market, and then I noticed that the market had given me another descending channel in the lower time frame right here. Right, so this is not rocket science. You just look at the market and it gives you signals and you get in. So I was looking for a signal right here, and then the market did this. What did it do? It gave me this descending channel, and it broke out of the trend line, and then I saw this very little correction here, and that was my entry. So I entered with a 15 pips stop loss. All right, and then my target was the overall. Let me show you this in, I think the 4 hours will show us that properly. All right, so the 90% rule over here, this was my target. So but if you go down to the 15 minutes time frame, you realize that would be a pretty decent profit. All right, so from the 15 minutes time frame, this trade is live. I've taken this trade already, so I'm ready for whatever happens. Okay, if it goes into a loss, fine. If I win this trade, I'm going to be making 15%. So imagine you're trading what's it called now, you're trading $100,000 account. This would be $15,000, you know, in profit. But then you don't know what can happen in the market. The market can come up here, so I'll be paying attention to this point right here, but the good thing is the moment the market gets here, this would have been at least 1:1. Let's see, this would have moved at least 1:1. Yes, 1:1. That's even 1.5 in profit. So I'll move my stop loss to break even, and even closing some profit, maybe if a 0.5% profits lock up. All right, I'll just lock in that just in case the market reverses. But you can see this is a trade idea I just took this morning. Today's date is the 2nd of June 2022. So let's see how it plays out. Whatever happens, I would do a recording and show you how this trade ends up. If I lose this trade, I'll show you. If I win this trade, I'll also show you. But I'll manage the trade as much as I can and let you see the result at the end. Enjoy the rest of your day, guys. This is Gift AUDJPY. Thank you so much for watching. Please do well to like, subscribe to my channel. Let's do this together. You don't have to do forex trading alone. Let's do this together. Thank you so much for spending the time to watch this video. It really means a lot to me. Please like, share, and let's grow this YouTube channel together. God bless you. Enjoy the rest of your day. Bye.